Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, hold on. Music is going to be too loud here. Let's fix that. It is another week, and this is going to be a little bit lighter on the data releases, but we're still kind of in a critical period, and there might be some interesting behavior from the markets this week. And in fact, we're already starting to see some of that. So coming over here to the charts, and I'm going to start with the dollar because, you know, it took so long for us to get below 100. I've been saying for years, like, we shouldn't be above 100. This is crazy. We are finally below 100, but it is just like plunging. And over the weekend, we got another pretty major move, like more than $1. We are now at 97.86. That is a big move. That is definitely going to have impacts on a lot of different things. And probably what we'll discuss most today. Here's the treasuries, so you can see some more selling in the treasuries again. And you know, maybe some of this is because of this whole thing, like Donald Trump wants the Federal Reserve to cut rates and they're not, and he wants Jerome Powell gone. And, you know, I think it's just a lot of job owning. Nothing's going to happen from it, but the markets do seem to be like moving from it. And maybe some people, some investors, not feeling too confident. I mean, you know, I'm very confident that Jerome Powell will remain Fed president, but I totally see that a lot of people would not be so confident, right? So maybe possibly that's why we're seeing some selling in the treasuries, and it is below the level that we were at on Thursday. So that is important to notice. S&P 500 a little bit lower today, nothing too big. It's still kind of within this range. We'll see where they go today. That might be one of the big deciders. Here's oil moderating a little bit today. Gold though, whew, my oh my. Well, a lot of that was on Thursday, right? But they are going higher today. Silver still not really catching up, but it is up. Copper, you know, it's kind of interesting that copper and silver look so similar. So it's kind of the overall metals complex, the way that they're moving. And then the big surprise, I think today, Bitcoin here. I mean, when I see it on the chart, it doesn't look too big, but that is actually a relatively significant move. Zero Hedge thinks this is a significant move. So I don't know. That's basically what we got going on here. So we'll keep an eye on here. I will note that liquidity looks okay. We're back into the 2000s, but the range is super tight, and it is a Monday. So we are in a situation where I think that there could be a move, but the opening range of the treasury market suggests that they're not going to do much today. So let's make sure I got everything going here and turn on our squawk. I'm sure that we'll see some more tweeting from Donald Trump this morning. I will keep up my Twitters here and everything to monitor closely. I think JD Vance gave the Pope Corona because it is going around. Was the Pope like sick? I was really shocked to see this morning on Zero Hedge that the Pope died. I thought that like he wasn't anywhere close to gone, and that there was maybe like more than a decade left of this guy. But nope. He's been hospitalized for weeks. I'm so... Well, you know, that shows how well I keep track of those sorts of things, huh? He has been. You know what, though? Like, so like... the more... LDS or the Mormon prophet, you know, it's not uncommon for them to go to the hospital and back and forth, and they still last a really long time though. So, man, okay, so I got new headphones, and man, they're interesting. I really think that my old headphones were going, like, there were some issues with the circuitry and everything, because there were some things that just didn't really sound clear anymore. And so when the guy on the news squawk started talking, it was so clear, it kind of surprised me a little bit. So I really like that about them. But like if I put the ear cups like where they're supposed to be, like so that you know, they cup in my ears the way that I would like. Do you see the little gap on the top of my head? So like I can let them rest. I think it's okay. We'll give it a few days, but I don't think I'm gonna keep them. Even though I like everything else about them, it's just they don't fit very well. It's super sad. Okay, so these are... Where's a box? This is the Roland VMH S100, made in partnership with V-Moda. So if you're not familiar with headphones, the V-Moda has like the hexagon pattern on the side of it. So they're V-Modas. They're V-Modas, but like tuned the way that Roland told them to. And I would say the tuning is really good. They've got these like these ports on the side here, so that allows it to get that really low. That was what I liked about those other headphones, is that it was really good at producing those super low frequencies, and these are really good at those super low frequencies. They're not quite as poppy as I would like, but that might just be a factor of having to break them in a little bit, you know. But the fit is just not right. The fit is just not right. So I think what I'm gonna do, there's another set of headphones that were a little bit more. I'm gonna try those, and those should come on Wednesday. If I like those better, I'll get rid of these. If neither of them are good enough, because the issue with the other headphones that are coming is they're heavy. They're heavy. I think that they've got a better setup for comfort and everything than the heavy set, the Barry Dynamics that I had. But if neither of those work, then I'll return them both, and maybe I will get the new Sonys. We'll see. I've never had this kind of... It's always been like when I got a pair of headphones, I was just fine with them. So I don't know what my problem is. But yeah, these ones, I can feel like it's resting more on my head, but I can feel it like pushing the tops of my ears down. We'll see how it feels after 2 hours, right? Treasury's really not showing many signs of life. Fed's Goolsbee, the impact of tariffs on macro economy could be modest. Man, I tell you what, Goolsbee, remember we were having all this talk about, oh, he's just a political hack and yada, yada, yada. I don't think he's a political hack. I think that he is just undyingly dovish. Like, he is just consistently dovish about everything. Yeah, closed headphones. I don't want the sound to be bleeding out into the microphone. So they need to be closed. Otherwise, I would totally go for open headphones. You know what? It actually kind of, my view of like what I needed did kind of shift a little bit. Because before I was looking for headphones that was like, you know, I can wear all day, practically. I don't think I could wear these all day. Now it's like I need them for the stream, and it would be nice to have them to like produce music in the evenings. I'm hoping maybe at some point here I'll be able to spend more time producing in the evenings. It's kind of been hard because I need to be out there and watching the kids and stuff. But if I'm in here and the office is open, they're gonna come in here. So if I can finish up my projects that I had with the office. So one project that I had was a dog kennel. And then the other project that I had was a cableway, because they want to get underneath of the desk, and there's so many cables down there. So if I had all of the cables, you know, picked up, then, you know, I could have the kids could be under there. I could like give them the iPad or whatever, and even lock them in the room, and it would probably work better than what we've been doing. Because what we've been doing is they just will not leave mom alone. So hopefully then I get more time in the evening to do some things. And kind of go back to the sort of routine that I had pre-2020, essentially. It's crazy it's been that long, but I feel like that I've lost 5 years of my life. Sometimes. They're kind of knocking on the lower side of that here. Let's see if they decide to go for it. It would be difficult if both sides of the Fed's mandate go wrong. It's also about magnitude and how long it lasts. Yeah, see Coolsby, he's still being dovish. And he is laying out the dovish scenario that I keep laying out, which is, well, yes, you could see some inflation from tariffs, but it would be short-lived. I see some people thinking that the Federal Reserve is going to raise rates, and I really don't think that that's going to happen. I think that it's almost certain that the Federal Reserve will cut rates. It's just a question of when they cut rates. And I would prefer them to be cutting rates right now. They're probably more likely to do it in like July or August. I don't understand your comment there, Amir, where you're saying, but I don't have space. Anyways, so if I'm just wearing them in the mornings, and then you know, I might use them to produce in the evening. Like I could have an open headphone, and I could have a heavier headphone too. If I'm not going to be wearing them all day. I don't know. I'm feeling like yeah, it does kind of. One, the ear cups are a little too close. Ear cups are a little too close, and I just need like a millimeter. Like these just need to be a millimeter shorter, and that would be good. It's not enough that I wouldn't be able to live with them. So if the other ones that I've got coming in are really too heavy. Oh, you don't have space for producing and singing. I gotcha. Well, I don't see myself singing, but maybe at some point. I do think, you know, when I go back and I listen on to the 2 tracks that I'm working on right now, Like they're in releasable states. I might just finish up mastering them, or send them out to somebody to master and put them up. So I'm really liking them. I really like listening to them on these headphones too. It sounded amazing on these headphones. Something about these ones that like the response is just really full. Citigroup expects Fed to deliver next interest rate cut in June versus prior forecast of May, maintains forecast of 125 basis point cuts for 2025. Let's talk about psychology while trading. Okay, hold on. Yeah, Gosby is saying that the Fed chairman's opinion is the most important opinion at the table, and that it carries a lot of weight. And that's definitely true. And the thing that I've noticed about Powell is I think that he is kind of risk adverse. He's not the risk taker. And almost all of the decisions that he's made have kind of been, well, yeah, we see this going on, but let's wait and see. Always erring on the side of caution, which is not always what you want to do. Might not be the right decision in this situation. But Citigroup cutting in June? Is it really June? Let's go to FedWatch. Is there one in June and July? Or am I just not getting the... Rules. FedWatch. So there is one in June and there is one in July. And the current target rate is 425 to 450. So they're saying pretty much 90% chance of no cut in May. Then when we get to June, it changes a little bit. Now they say 60% of them are saying June. Okay. And then when we get to July, the majority are saying that there will be at least one cut. And in fact, most say, 55% say that by that point there will be two cuts. So there'll be a cut in June and July. Actually, that's interesting. So Citigroup, they saying 125 basis points of cuts. That means that they expect them to cut June, July, September, October, and December. So we were having a conversation with this on Discord the other day, because there's this one guy in Discord that just really strongly believes that interest rates aren't going to come down. And I'm coming back and I'm looking at this and I'm like, okay, so the Federal Reserve is going to cut later this year. The effects of inflation, are kind of temporary. The effects of tariffs on inflation probably does increase inflation a little bit, but it's going to be a temporary thing. And then meanwhile, it's probably going to have a deflationary impact on the economy. Could be a sort of thing that really, really hurts growth. And interest rates are already really high. Like, we did a 50 basis point cut back over here. So I think that this is probably, well, anywhere below this, probably a good place to buy. But not everybody seems to see that. No, I didn't say anything, but there was a point there where they were kind of testing the low, and we did see about almost 5,000 contracts go into it at 25, but they did just kind of back off. So I would say it's entirely possible for them to go down, but there's just not enough directional flow right now. We're still range bound. Remember me, bro? Zayn Ali. Well, there's many Alis, but I don't remember a Zayn. Hold on, we were supposed to talk about psychology. My memory is terrible, yeah. It is terrible. Oh, this was from Friday or Thursday or Friday, that one? Was it Zayn? I don't remember. Is this the guy that I guessed was from Pakistan? Oh, cool. Welcome back. I'm glad you came back. Okay, wait. Vital wanted me to talk about psychology. Let's talk about psychology a little bit. Okay. The reason that your trading psychology is bad is because you don't have an edge. If you don't have an edge, if all you're doing is you're trading a random line, that's going to lead anybody to go crazy. So the number one prerequisite to getting good, solid trading psychology is you have to have a real edge. Here's the thing. Here's the problem that I think that people have. You want it, right? You want it. And there's this chemical in your brain called dopamine. And a lot of people call it the pleasure chemical and things like that. But I think that there's a lot of misconceptions around dopamine. Because dopamine does not necessarily get released in response to you achieving things. Dopamine gets released in anticipation of achieving the thing. Okay? Basically, Uzi has a better memory than me. Maybe he does. Dopamine is there to say to your brain, the thing that you are doing right now is potentially useful to your survival and you should keep doing it. That's what dopamine is about. Okay? Doesn't necessarily get released when you receive the thing. So when you're trading there and you're in a position and you're going to make a ton of money off of that trade, right? So because you believe that trade could be the big one that makes you a millionaire or whatever the deal is, right? As you're in the position and you're watching it, you're anticipating that you're going to make money, and that's producing dopamine. When you take the profit, it doesn't produce the dopamine, which is often why we will stay in positions for too long, even when they start going bad. Okay. And on top of that, when you get in this like dopamine and you're not necessarily getting the payoff, can create anxiety as well. And that's why you kind of will get some people that will just turn into absolute wrecks. They will double down on trades. They'll do all of the bad things, right? So it's because of this cycle where being in a trade produces dopamine. It works against you. What you have to do is you have to change your frame. What we are doing is degenerate. You're probably not going to become a millionaire from day trading. Being a successful day trader does not necessarily even speak well of you. Okay? So we do all of the work. You take the trade. And once you're in the position, like what happens. And you're not sitting there worrying about if this is the one that's going to be the big one or whatever the deal is, right? You're just detached. It doesn't matter anymore. You don't care. You don't care because you know that what you're doing is degenerate and not really likely to lead to anything in the first place. Okay? Meanwhile, where should you and that just comes from a mindset, because the dopamine is kind of produced from this internal belief, right? Because you believe that this is potentially useful to your survival or that it's going to make you really, really successful, right? That belief that's what it's going to be the result of that produces the dopamine, right? So what we need to do is we need to shift our mindset to the thing that is going to help me, the thing that's going to make me a millionaire or whatever, is understanding the market, reading research, understanding that research, understanding what is currently happening in the world, what the current events are, and how those can potentially affect markets. doing your own research and finding things about the market that other people don't necessarily know, and that you only know because you were able to do the science yourself, right? And now you're getting the dopamine from doing the research instead of getting the dopamine from being in the position all the time. You see what I'm saying? Right? Shift the beliefs in your mind so that the chemical incentives line up better with the actions that are actually going to lead you to success. Because I'm guarantee you, if you're sitting there with a 1-minute chart and putting all of your focus into does this line go up or down, it naturally leads you into bad psychology. I think this is why, like, the majority of retail traders think that it's all about psychology. It is because they're trading something that ultimately is just kind of a random distribution with really fat tails. And that eventually leads them into that cycle, and then they will start making those big mistakes, right? But the reality is that even if they master their psychology, they're still not going to have the success because it's random. There was a time when my strategy had 70-80% win rate. After some time, my stop losses were being hit, and then it started with them all the same strategy and started again. Yeah, well, but that's probably what's going to happen. So if the other big thing that really holds retail traders back, this is probably the biggest thing that I think holds retail traders back, is that they tend to have set stops and targets. So if you have a set stop and target, then your results are largely a factor of the volatility. When you have set stops and targets, there's just no way of getting away from it. Like, your results are just going to mirror the volatility. And so, when the volatility is in the right range, you're going to win a ton and your results are going to be really great. And then when you go into a period of higher volatility, your stop's just going to get hit all the time. That's basically what happens. And then, they'll do back tests, and they don't do a back test over a large enough period of time. Usually, I kind of wonder if it is, because every time that I go online and I see a back test, and my first comment is, well, you need more data. Always. Almost without exception. When I go online and I look at people posting back tests, not enough data. Is that because people just don't know better? They don't realize how much data they really need to be able to verify a strategy? Or is it because they don't want to believe that you need that much data? Is it that they think that a strategy should only work over a 1 or 2 year time period? There was one thread where, when I mentioned that, and it was like, well, you need 5 years of data, and I got downvoted super hard. I thought, well, it must be because they think that I'm going to find an edge that only works over a year or something like that. Is there such a thing as intuitive trading or vice versa mechanical trading? Well, so when we say mechanical trading, we mean a trading strategy that has very explicit rules. There are many people out there that think that they're trading mechanical strategies that are actually a lot more fuzzy than they realize. Once you have to really systematize it through code, you start to realize like how many extra little things you might be looking at you don't realize. But that's what we mean by mechanical, right? Intuition. An intuition strategy would really be more of a discretionary strategy, right? A discretionary strategy. But I think from there, I think that you really have to whether it's mechanical or intuitive is, I think, not really the big distinction. I think that really what it is about is whether you are relying on the past data generated by the market itself, or if you are taking in information from outside of the market, which would generally be considered fundamentals. So really it's kind of like technicals versus fundamentals. And the argument that I'm trying to make to people is that the world has changed. The world has changed, and for day traders, especially day traders in commodities, I think that fundamentals matter more than technicals. There's just not a lot of technical edge available to retail traders left. It just isn't. It's just the reality of it. There's all these robots testing absolutely everything, any kind of like really, really solid technical setup. Robot probably already taken it. So there's just not a lot of technical edge left. And it's not really worth trying to create a strategy that's purely technical. At least not just taking like if you're just taking outright positions in futures, then it really does not make much sense to be trying to make a purely technical strategy. We backtest stuff to understand the markets, and so that's why I'm still willing to spend time with that stuff. Maybe there's a place in order flow. I kind of think that there's still some place in order flow, but especially with just price, it's all taken out. So you're going to have to rely on fundamentals, right? And in fact, what we know about the markets kind of supports that, because the market is more statistically efficient than it is informationally efficient. So as a retail trader, the answer to that is that as a retail trader, the consequence of that is that a retail trader is more likely to find a real edge through fundamentals than through technicals. So really what that means, the market is more statistically efficient than it is informationally efficient. But the caveat to that is that because the market is not informationally efficient, that means that you can have an edge and still lose, right? You're more likely to find an edge through fundamentals, but that edge is going to be less reliable. And that's, kind of a double-edged sword in that respect. See what I mean? I've started to learn about patterns, in particular the Drake pattern. I'm not sure I've heard of that one. Are you referring to the hypothesis of an efficient market? Yeah, generally speaking, it is. But so I think that we can kind of separate that out into two different kinds of efficiency, right? So one way of thinking of the efficient market hypothesis is I can go and I can analyze all of the past data, and based on the past data, am I able to predict the future with that data? And the answer, generally speaking, is no. And so we say that the market is efficient because of that. This is what I would call a technical or statistical efficiency. So the market is very statistically efficient. The other way of looking at is the market efficient is saying that the current price factors in all available information. Okay, that if we were able to calculate, what the value of this thing should be at this time, the market should never deviate from that very much. And on this measure, we find that the market is not very efficient at all. So there are some instruments, like some fixed income instruments, where you can really explicitly value what that thing is worth, because it's going to generate a certain amount of yield, and based on the other interest rates, you can know what that bond should be worth exactly at that time. And if you do that, you find that it is almost never at that price. And in fact, it can deviate significantly far away from that price. And why is that? Well, because of temporary liquidity concerns. If somebody is buying a ton of that asset right now, then it's going to make the value of that asset move up. That's just what the limit order book does. right? So you're coming in here, if I buy all of the contracts there at 28.5, then it's going to tick up. That's just the way that it works, right? If somebody is really aggressively buying, then they're going to move the price up. So that happens regardless of whether there's informational content behind what you're doing. Could be completely random. That person might have decided to flip a coin that day. They might have just been taking this trade on a whim. I mean, that does happen. Or, you know, it could be based on things like how much money was contributed to that fund that month and how much money was taken out of that fund that month, and they have to rebalance and things like that, right? Still moves the market. And that's why markets are not informationally efficient, because the price is a reflection of the liquidity of the people buying and selling and how they're buying and selling it right now, and not a reflection of the informational content. But a piece of news comes out, right? Jerome Powell says, you know what? I was wrong. I do think that we should cut interest rates faster, right? And then probably the treasuries would buy up like mad, right? So based on that information, we should be able to, or theoretically we could, determine what the fair value of the treasuries is now, right? But how far it goes off of that news event is not determined by the fundamentals. It's determined by how many contracts come in and buy or sell. That's why you almost never get to the efficient price, right? So the market is statistically efficient. It isn't very informationally efficient. And that means that there can be information that you know that is publicly available isn't factored into the price. And if you can find a situation where you know that it will be factored into price soon, that is that this, you know, this isn't being correctly valued by the market, but something's going to happen, or this situation is going to be such that people start to come in and they buy it. You can predict that other people are going to come in and buy or sell based on that fundamental piece of information. Then you've got a trade. And that is probably the best source for edge for retail traders. Yeah, the problem with the fundamental approach is the old saying that the market can stay irrational for longer than you can stay liquid. Yeah, because see, it would be a mistake to say, well, the market is not informationally efficient. I can see that treasuries should be higher than they are today. Ergo, I can buy them, and eventually the market will come in line with me. Because like that's only true on like a 3 to 5 year time horizon. Okay. So you have to have a situation where you know that the orders are coming in if you're taking any kind of a short-term trade, right? That's kind of like the linchpin there, right? And the situations where you know that like that volume is going to come in are not every day. You know, I think that we get 2 or 3 really, really good opportunities like that a month, where I'm really, really confident that the orders are going to come in. Today, you know, like the dollar selling, I think that that's a significant thing. I think that there's going to be some knockoff effects from that, but so far I'm not seeing that in the flows. I'm not seeing that people are coming in and buying or selling the treasuries because of the dollar moving. Not yet. You're talking hypotheticals. There's no way of knowing if news is or isn't priced in. I wouldn't say that it's all hypotheticals, because again, there are some instruments out there where we can really very accurately value what they should be worth at that time. But more broadly, so like some of the research that kind of leads to this conclusion, like how did they come to that conclusion, right? Well, they'll come in and they'll say, okay, here's a piece of news, and was like the market expectation and the difference between the news, and does that correlate to how far the market moves that day, right? Because that would be a measure of, okay, here's a new piece of information and how big of a difference between what we expected and what that actually was. And that should be proportional to how far the instrument moves. And we find, no, it doesn't work that way. So what is it? It is a factor of how many people trade it. You know, I wouldn't say that there's like any one individual study that like really kind of like was the conclusive thing, but it is just the general like theme, and after decades of research, the inevitable conclusion is the market is not informationally efficient. It is not. I read in the book that there was a man which used a juice or coffee maker and he found a flaw in it and shorted the market before a lot of people knew about it. After some time, the price dropped a lot. Well, there you go. That's a perfect example, Zane. And I mean, we're finding situations all the time where we know something. I think, well, what was some of the better examples? You know, the first one that comes to my mind was the numbers after COVID. So one of the things that started to happen was that the market would react to the latest COVID numbers reported by the CDC. And we very early on, realized that there was kind of a bias in those numbers because if somebody got sick on Friday, they would wait until Monday to go in and get checked. And so there was kind of a little bit of a lag that you could predict in those numbers. And for about 2 weeks there, you were able to make big money from predicting those numbers. And then the market caught on to it. We cannot analytically formulate whether a news or liquidity condition is being factored in the price, but now with machine learning methods, we may be able to learn about this. Well, so I think that once you kind of understand how the market works, right, that what really determines price is flows, essentially, right? Now what we can do is we can model the flows, and we can say, well, there's this thing and there's this thing, right? Because that's kind of the part of the problem is that the traditional ways of looking at the market are not sophisticated enough to deal with the complexity of the market. When I say complexity, what I mean is all of these little individual interactions can result in higher level behavior that is very, very difficult to predict from just looking at the low level actions. But when you're able to look at all of those actions and kind of model them all working together, then you can kind of see how things will turn out. So if we come in and we say, okay, well, there's index funds and they're going to be rebalancing and this is what they're going to do. And there's people trading on this particular piece of news and that's what they're going to do. And there's other people that are, you know, losing money and they're not able to put up as much liquidity. So here's what they're going to do. Now, all of a sudden, you can make much more accurate predictions about what the market is going to do. And so that's what we do is we come in and we take all of those flows and that we know of and add them all together and see if there's an imbalance. And the rare occasion that there's a significant imbalance, that's when I take trades. All comes back to timing, maybe the impetus, but we still need to know when, and inevitably that evidence is technicals. I'm not following you at all. I mean, the thing that's really interesting is that, well, there's two things. Number one is that you really have price is the result, right? Because price is how we make money. ultimately, right? So we're trying to predict price. But if all you're using is price, then you can't make very good predictions, right? So we take the flows, but then we have to predict the flows, right? So what we have to do is we have to look at the data about the flows. That's why when we're coming in here and we're trading, we got to be watching the DOM. We have to see the orders hitting and how they're doing it. And, kind of separate out. This set of orders was this, and this set of orders was this. And, when we're watching the news squawk and we're making all of these predictions and we kind of generally know. And then when we see a flow we don't expect, of course, we're kind of looking for information that might explain that flow, right? So that we can actually use that information to make the prediction of flows in the future. And then once we have those predictions of flow, then we can use those to make a prediction about price, right? Now, there was a study that I have yet to read yet, but that was kind of suggesting that they could reconstruct meta orders from public data. So that could be a big help in helping us predict flows in the future and making it a little bit more quantitative. So what kind of edge do these quantitative trading firms have other than data? Well, so when you're talking about the quantitative high-frequency trading firms, a lot of their edge comes from statistical arbitrage and options pricing models. So a lot of the volume or the liquidity provision that you see, even here in the treasuries, for instance, they are taking other positions in the options and so forth, and through hedging themselves with options, that's how they make money. Do you see? That all kind of requires you to be really fast, right? So that's why there's a whole world of technical strategies that aren't really very realistic for retail traders to take advantage of. But that's why earlier I said, especially if all you're doing is taking outright positions in the futures, right? That's kind of the big problem, is that if all you can do is take one contract in CN buy or sell, that limits you so much that it makes most of the kind of technical strategies that we do know work out of reach for you. Because one way of doing things is taking advantage of mispricing in the options. You have to be fast and you have to have a lot of money to be able to do that. Another way of doing it is being a liquidity provider in general and or looking at highly correlated instruments. And in order to realize the edge from that, you have to be able to use a lot of, provide a lot of liquidity. So unless you have millions of dollars, that's not really very realistic either. Not one MBO in the book might have to switch to gold. Well, gold is certainly moving today. But, we got 2 minutes, so you want to see if things shift around. No retail trader platform can execute quick enough to engage in arbitrage plays? I'm not sure that I would say that. I think that the biggest barrier to you is definitely having enough money. So if you had $1 million to come in and do some sort of an arbitrage play, and that's kind of the weird thing though, is like, if you, a single person, had $1 million, why would you invest it all in doing arbitrage plays? Because the percent return that you're going to get per year on that isn't going to be very good. You know what I mean? Like, it's just, this is why we get these hedge funds, because, there is going to be some mutual fund out there or whatever that they need a certain amount of exposure to something that's like a return different from what the S&P 500 gives you, right? And that's what makes those sorts of things possible. But if you're just a regular person, why would you put $1 million into it? I don't know. Well, let's just say that you had $1 million, right? Could you then do it? I don't know how competitive that you would be, but there certainly is some room, because there are co-located server farms out there. So you certainly wouldn't be the first, but you can probably get, ahead of at least 60 to 80%. That might be enough for your strategy to work. I don't know. Okay, here comes the open. By the way, the opening imbalances, like market on open, is pretty heavily tilted to the sell side for some reason. So let's see where they go from here. So far, they seem to be dealing with it okay. Isn't it crazy? We're almost to the end. We got 30 minutes left. Give any sensible retail trader $1 million and they would instantly be better. I would go as far as to say undercapitalize it. Y'all, sure. Undercapitalization is definitely the #1 challenge, for sure. Yeah, that's kind of part of why it's like, we as humans, we can't deal with complexity. Our brains just can't do it. It's kind of funny because humans overall will avoid complexity, and yet without complexity, we get bored. So I notice this in video games a lot, that there has been a trend in the industry to make video games more simple, because if it's too complicated in the beginning, then people don't want to play it. But then, because those games don't have a sufficient amount of complexity, people solve the game essentially and then get bored of it. And that's why a lot of video games these days, they don't seem to last as long. Versus a game like Brood War, for instance, StarCraft Brood War is probably the most complicated video game out there. And it continues to have a vibrant competitive community and keeps going and going. More so than any other game. Because it has that sufficient amount of complexity. Isn't that weird? So one of the ways that we reduce the complexity is we just say, I'm going to be all in, all out. Right? That's one way of looking at it. That does kind of, if you just say I have to, all my trades have to be all in, all out. I'm picking one point where I buy and one point where I sell, or vice versa, or whatever. And I limit myself to that. That's a lot of complexity that we get rid of. And then once we're just looking at that, where can we get our edge from? Right? But then that comes back to where what I've been saying, which is that, like, especially if you're just looking at price, market is very statistically efficient, isn't very informationally efficient. As time goes on, my love for StarCraft only deepens. maybe it's because that's the only one of the games that I used to play that's still really there. Because the Unreal Tournament kind of got left in the dust. But I still watch StarCraft tournaments and stuff. It's so much fun to watch. Well, I must say, this has been an okay trend, but the flows are still pretty wishy-washy. In fact, the 5-year has been selling this the whole way, which is very interesting. Not that I'm really seeing significant flattening in the yield curve, but that's what's happening. So the 10-year is kind of flattish. 30 years kind of flattish in terms of deltas, but the 5-year has been net sell. And I don't keep a 2-year up. Maybe one of you guys has a 2-year up could say if they're selling even harder in the 2-year. Was a little flicker of activity. I think I'm going to recenter there because of that. And it looks like the S&P 500 after, so the imbalances were sell. The first little swing was higher. Now they are testing the downside. So, another thing we have to discuss is how do you... Oh, I didn't even turn the robot on. Well, it doesn't matter. It wouldn't have taken a trade today anyways. But the whole leaving the stream going for 90 minutes after I leave. Because it seems that most of you guys don't stick around. You want to hear me, and if I'm not there, there's no point in sticking around. I kind of thought that, chat would keep going. But how do you guys feel about that? Do you think that it's worth it? Because I kind of wonder if YouTube might punish us for that. Like it sees that the engagement goes down and it could hurt the stream. So I'm kind of wondering if it's not worth doing that. I'm in between because I agree engagement, of course, goes down. Yeah. I mean, the robot is cool and all, but I don't know. Maybe what I could do is I could continue to show that on Discord or something. On the $3 Discord. Kind of wish. So like, well, I don't know. I could just stream this page right here, right? Move the robot over to where the market analyzer is and just stream that on Discord. Or be like the bookmap people streaming and just stream DOMs all day. Yeah. Well, and that's another thing is that I do want to have that order flow. I want to be able, if something happened, to go back and watch it and see what was happening. So it's useful to me to keep it going. I would like at some point to have the order flow data on stocks. Well, the current situation might not be forever. Although, that's interesting. Because if I, if I were to say move closer for the new job, that would only give us 30 more minutes. Wouldn't keep us going until 9. The only way that I get to keep going until 9 is if the stream becomes my job or it's a remote job. And I don't know if it's going to be, like this one that I'm doing right now, if it works out after the 3-month period, I'm probably going to do it for a couple of years. I want to stick with a job until it's done, In considering that, I have been thinking about putting more of my attention into swing stock plays because of that. It's like, well, we'll get like the early morning news stuff. I don't know. I kind of feel like there's definitely this period between like 8:30 and 9 that we tend to get moves. But I wouldn't necessarily say they're the best moves. And the best trades that I get are ones where I'm taking it really, really early. And if I just take it off at 8, that's fine. I think I'm worrying too much about that we don't stream long enough. And on the YouTube channel in general, if the YouTube channel ever has more success, it's going to come from the videos and not from the live stream. So but in terms of this over here, yeah, I think that our ranking of these tasks is correct. We need to focus on the scalping robot. We probably should have done some of that today, but you know what? You guys had some good questions and stuff. We had good discussions, so it's totally fine. And then the machine learning thing, and then we need to make a video about trading view. I got 2 videos ideas. Was kind of like I said, you know, like let me focus on the new job for a week, and we'll see. And sure enough, as soon as I did that, and then I got on Friday, and the ideas just magically come to my mind. So I got 2 ideas for videos, and then maybe we'll do this trading view backtester one. One thing you didn't mention is that trading order flow is a hard job compared to programming, or hard job comparable to programming or engineering. People have to be good at math even if you don't use it. Logical mental agility is MH. Oh, maybe. I mean, I think the issue with order flow is that it requires a lot of experience. You really have to start, you know, all of the things that I talk about. You got to come in and watch the order flow, but you also have to be watching for like what are the things that are driving the flows, and then that's where you kind of start to get the experience. It's like, okay, when it's like this, those order flows tend to exhibit themselves in these ways, and then you get to the point where you see it doing a certain thing, and you can say, well, it could be this or this, but it couldn't be this or this because of these reasons. It must be this. Well, that means there's way more on the way, and I can buy it, right? YOLO full port prop firms until you hit a payday. No, that wouldn't keep us going. I mean, honest, you know, I think maybe I should be grateful that I'm in this situation because I have a really good day job, you know, and it would be very, very difficult to replace that income through scalping. It really would be. That would put me in. I don't think people realize this. Like if they realize these things, I don't think nearly as many people would be interested in day trading, right? Like if you want to make a few $1,000s, few extra $1,000s a year, or maybe even a few extra tens of thousands of dollars a year, then go ahead, right? But if you want to make like $100,000 in a year, and you want to do that every year, it's just not very realistic, right? So what makes more sense? You keep the day job and you just kind of do the day trading as a side thing. Honestly, if I came in here and, you know, I turned like my little $1,000 or $2,000 account into like $10,000, well, maybe not at $10,000, because at $10,000, like between $10,000 to $20,000, I think that having the extra contracts to work with would be really useful, right? But after that, I think that I would probably start taking the money out and push it towards the swing trades. You know, if I, and here's the other thing is, getting funded is not like, when I first started this, I kind of thought, well, okay, if I pass a combine and then everybody will see that you can pass a combine and then everybody will want to watch, right? But it doesn't work like that because you can do it like 1 in 3 times. So there's tons of YouTube streamers out there that claim to be profitable traders, like they've been funded before and stuff. Doesn't really differentiate you. My rich is a lot lower than yours, yeah. Gonna show you something. Let me find it. Okay, Donald Trump is tweeting, there's virtually no inflation, and calls on Powell to lower interest rates. Powell's always too late, except during election period. Oh, let's go find it. Rest in peace, Pope Francis. Preemptive cuts in interest rates are being called for by many, with energy costs way down, food prices, including Biden's egg disaster, substantially lower, and most other things trending down. There is virtually no inflation. With these costs trending so nicely downward, just what I predicted they would do, there can be almost no inflation, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates. Now, Europe has already lowered 7 times. Powell has always been too late, except for when it came to the election period when he lowered in order to help sleepy Joe Biden and later Kamala Harris get elected. How did that work out? That was Donald Trump's tweet about 5 minutes ago. Oh, I was slow on that one. Why do you think most prop firm traders perform worse than random chance? Well, number one, because the ideas that they are trading off of are incorrect. They have a view of the market that is just objectively false, and they are trying to do something that will just never work, which is taking a single 1-minute time price series and trying to find edge from that. That's weird. There we go. There we go. Yeah, this one right here. Okay, here's what I was going to show you. When he was saying, like, my rich is not as big as your rich. This is my rich. This is goals. Okay, I'm not necessarily a huge fan of the outside architecture. It feels a little bit too McMansion-y. $3.2 million house. Look at the view. Come on, show me the big picture. Look at the view that thing gets. What an amazing view. You just get the whole valley. You can fit so many wives in this bad boy, right? But the thing that kind of attracted me to it, it wasn't not just that it was big, but like I liked the look of the interior. There you go. This would be our stream room probably. Maybe, I don't know. I want to do that. Be nice to be like looking out the window, but no, I would just set my desk right there in the middle, and you guys would see this bookshelf behind me. I like that bookshelf wall shit. Yeah, me too. I've been thinking about building bookshelves of that nature in here, but I don't know. I've also been thinking about turning this wall into a giant LED wall. That would be a fun project. I liked the kitchen. See, I like that the kitchen is real wood, and instead of like everything being white. I don't know if I'm like super about the color of the center cabinet there, but whatever. The one thing I would change is I want like I want a show kitchen. So there's like this new I wouldn't say that it's new, but it's become popular recently, where you have a kitchen in the main space that is mostly for show, and then there's another kitchen in the back where the real cooking happens, so that you can have a chef or a servants or whatever doing the cooking in the back where nobody can see them. And I want that so that my wife can hide herself in the kitchen and my boys not be constantly bothering her, because that's the thing that annoys her the most, is she's trying to cook and the child will just not leave her alone. So I want something like that. And I don't, like one space can be like open floor plan, but then I would be interested in other spaces not being so open, because I kind of have to restrict where Asher can go. I couldn't afford those chairs. Anyways, but when you get further down in here, okay, so this is their mud room. Oh, I'm so liking that. That is so much better than what I've got. There's not enough space for all of our storage, because we got 7 people in our house, right? A really good laundry room with some room to like actually fold. I don't know. I wouldn't necessarily like this. I would like a lot of counter space to actually fold on. I kind of like this circular area. That's cool. And then you get further down here. There's like a super sweet playhouse. Look at that. Oh, the kids would love that. Kids would love that. This actually has like 2.5, because then there's a kitchen downstairs. And then there's like another full kitchen. And then, okay, nice porch. Really big porch that's covered, and it's even got a fireplace. I'm liking that. Probably not a big enough yard for my wife. She wants a bigger yard. See, that's too small of a yard for her. I'm like, oh, that's great. I don't have to mow the lawn. Perfect. Perfect. Nice balcony high up. I'm loving it. Big garage. I can put like a woodworking shop in there. Perfect. Look at this. It has its own splash pad. Oh, my boys would that would make them the happiest thing in the world, to have their own splash pad in the backyard. Yeah. So $3.2 million. That's the new goal. If you're going to trade and you want trading to be like your main income, I'm just telling you, it's not very realistic. That doesn't mean that you shouldn't trade. I think that retail trading can be extremely rewarding if you go into it with the right expectations. If you go into it with realistic expectations, then it can be extremely rewarding. But everybody has this idea that like, well, you should be a millionaire or else, maybe your advice is not no, because it's just not the way that retail trading works. But if you're going to trade, then I want you to be as successful at it as possible. And I'm giving you the best information that's going to give you the best chance. And, there's this idea that like if you have a YouTube or something like that, then it must not be that good. No, it's not that it's that they're not a successful trader. It's that a really successful retail trader is not a millionaire usually, or if they are a millionaire, they made it through some other way, like their YouTube. I think that for me, probably at the current time, the most likely avenue for me to become a millionaire is either through an individual stock just really taking off, or building our own platform. So I gotta get to a place where I can spend more time programming in the evening. That's what we gotta do. That's the near-term goal. So that means I am gonna make some videos. I'm gonna be writing them. Hopefully, I had some downtime at work. I might, I don't know. We'll see. During lunch or something like that. Finish writing these 2 videos and then record them on the weekend. I think we can do that. So we'll still be putting content out, but I won't be focusing super, super hard on the content because I'm going to be getting this room shaped up a little bit so that it's a little bit more kid-proof. And then doing more work. I would rather live in a small wood cabin I build myself that barely has power and a large plot of land before I would ever be interested in a fancy house near people. Oh, okay. I would really like something that is like the balance. You know what, though? I don't necessarily care so much that it's people so much as it is that it has a good view. I like the good view. And seeing the whole city, that's a good view. But if it was like on the other side of the mountains and I just got a view of the whole valley, that would be fine too. Because I would like to be closer to the ski resorts. I don't know if that one's going to work though. If you're willing to risk it, you can get the biscuit in it. No. Like this is a crazy thing. So like with futures trading, even if it was like a super, super big trade, you're still talking about tens of thousands of dollars one time, right? But I only realized that because I have a pretty good day job anyways, right? I'm making 6 figures anyways. And so I can kind of look at that and I'm like, how, with what is like even really good performance as a retail trader, like what's realistic of a return a year, like 30% per year. That's not going to get you to millions of dollars. Unless you already started with like 100,000, right? And like we were saying with the psychology, right? Part of that unrealistic expectation is part of what kills your psychology, because you think that the next trade is going to be the thing that you really make it and all of that. And that's what destroys your psychology. Once you realize, it's a hobby, what we're doing is kind of degenerate, have realistic expectations, and then you can focus all of that dopamine on the things that are really going to make you better, like researching about the market. See? 5% a day by day trading on average, that'd be crazy. You really average 5% a day. And you kept that up for years. Yeah. I mean, you can, there is economy of scales with it for sure, but I'm telling you, these people that like you read about that became millionaires from trading, they were doing something completely different. Okay. They were doing something completely different. Well, anyways, yeah, we're just going to shut it down today. Kind of interesting, the move up that we've had. It does kind of seem to be driven by equity correlation. We'll see things keep going. I'll certainly be monitoring the market throughout the day. I guess I need to be posting them in the $3 Discord. I feel like I'm letting you guys down on the $3 Discord, so I'll make sure to put my updates over there. He took a $10 billion position for an interest, right? I would be really surprised if there weren't people in the administration trading, for sure. And I keep seeing all of this noise on social media about it and how the SEC should look into it and everything, but I'm pretty sure that it's considered public information and that there's nothing illegal about it. Well, anyways, you know what? The headset is not as bad after 2 hours as I thought it would be. It's still touching my ears. It's still not, and I wouldn't say that it makes the ear sore, but it's definitely not perfectly comfortable. So you'll see. All right, guys, I'm gonna get going. I will see you tomorrow. In the meantime, stay excellent, team, and be careful out there. I mean, the market's been okay today, but I think that there's a increased possibility of moves this week. So be on the lookout, right?